Every day, the fast 5 picks, as you saw, was more than 5. How many were there? Quite a few, like 20, right? If I click this, you'll see there is 23. So some are bulls, some are bears. Where did those come from? Those came from, I looked at the market, and actually I didn't look at the market. I just looked at the sectors and said, what's the best sector going up and what's the worst sector going down? Find me some stocks setting up in there using the payday cycle, which is a combination of Heikin-Ashi, or is it Heikin-Ashi, and MACD. And looking for them to do a doji setup on the 20-day moving average. So looking at that, this is our picks. We're going to come back to these. Do you have any favorites in there? Do you have any favorites? Do you want to go through the markets first, or do you want to go through the picks? Your choice. Earnings season is the big news, guys. Let's bold this a little bit. So that means make sure you know when earnings is on your stocks. Here we are. So this morning, Citigroup, Goldman Sachs, JP Morgan, Bank of America. My goodness, that's the big banks right there. How'd they do? Did you guys look at those? After the bell, Equity Bank, tomorrow, ASML, Progressive, which was insurance, but it is considered financials. So what we have here is our favorite sector, financials, doing good. And there's your earnings. So I'm thinking maybe financials are going to stay in the lead as the best sector. What do we have here? We have BlackRock, ConAgra, Morgan Stanley tomorrow morning, Johnson & Johnson, PNC Bank mortgages, right? MTB, United Airlines, United Health, another bank here, GE, Abbott Health, State Street, Netflix on Thursday, Alcoa, Intuitive Surgical, FNB is a bank, Wise is a money transfer, kind of like Western Union, Travelers, Fifth Third Bank, RF, a lot of banks, which means a lot of effect on the financials. So number one, make sure you know what the company you're trading, if it has earnings coming up and you want to hold through earnings. Or number two, what sector is it going to affect? Double Doge, trying to break out. Really a nothing burger here, right? Looking at the RSP, same thing, a nothing burger, right? Diamonds, same as yesterday, sitting on the 10, another nothing burger. The equal weighted Dow, not too bad. Is that a green candle? Nah, it's a nothing. Just sitting there. It's still slightly bullish. Let's go to the triple Q equal weighted in its range between the lines. And honestly, I'm going to have to say it's just nothing like that. And regular Qs, same thing. The Qs are just nothing. Let's look at the small caps. Can you tell us anything small caps? Nope. Same as yesterday. It is critical holding the channel. We are pitched. So basically, just holding ground, just hovering. So, markets, I'm going to, if anything, slightly bullish because we're above the 10. Small caps are just wavering here on support. That's the one to watch. Looking at China was trying to make a comeback, and it is. It's expanding candle. There's the 20. I don't need to go there. That's on the weekly. I don't need to go there, but that's the weekly 20, right? Rest of the world, just hanging out. So everybody's hanging out, kind of wavering. China's trying to make a comeback. Are we waiting for China to jump aboard here? Okay, looking at the dollar. The dollar, after the CPI, losing a little steam here, right? And could that be that they're thinking about raising interest rates? Lowering interest rates? It's basically nothing. As we get closer to FOMC, let's see what the dollar does. The VIX down again, a little bit. No fear in the market. Bonds, is it coming out still? Yeah, money's coming out of bonds slightly, still downtrending. Again, this will be affected by interest rates. Bonds like higher interest rates. But here we are, people coming out of bonds. Are they going in the market? So what I would like to see is the dollar go down, but it's going sideways. Let's see if this breaks to 20 tomorrow. So there you have it, guys. The market, not real strong trending either way. Now, financials looking pretty good after what? After the earnings. So let's go look at those earnings I talked about today. And if you want the financials list of companies, you could come down here and click this, and that'll give you your top holdings, right, of financials like that. And there they are. See them? How nice is that tool? That is so easy compared to most websites. So Citigroup had earnings. You click on Citigroup, come up here to the little sprocket, which I've already done. Hit earnings right there. See that? Right here. How did Citigroup do after earnings? Look at that big old candle. Not real good. Pretty volatile, but down, right? And then who else do we have? Goldman Sachs, which is a big, big player. Really good. Look at Goldman Sachs. So that wiped out any Citigroup move, right? JP Morgan, Jamie Dimon. Okay, let's go JP Morgan. Gap down, rallied up. What do we call that? We call that an engulfing candle. Let me clean out the. That's quite a recovery here, isn't it? Here's what Heiken Ashi looks like. Look at that. So you can see the engulfing here. Look at how wide that top of the candle is in the bottom. And then we had Bank of America, BAC. And see, if you come down here, it hasn't added the numbers yet because it takes a couple hours to digest the data, but it will. Bank of America, pretty good. Pretty good. And that's it. Is that all the banks you got? So with that said, I could go back to financials right here, right? And your top holdings are still to go. Burke B. So JP Morgan came out today. We saw that. Visa. And when's Visa earnings? The 28th, so a ways away. And MasterCard. And Bank of America is a big player, and we saw that today. See that? We saw that. So you can see the big players, what's left. Burke is 11.6%. And that's coming up after Visa and MasterCard. So once you get these players out of the way, 11 plus 11 is 22. There's 30. 5. 40% are just in these. So we only have these three to go, right? So this is what XLF looks like on Heiken Ashi. And notice we actually made a high today. So the market liked what it saw in earnings. I don't need to digest all the news because there's a lot more banks to go, but the market kept it above the 10. That's bullish. I don't care what earnings were there, if they're good or bad, it's still bullish. There's a sector. But if you look at the equal weighted, let's go see if the equal weighted agrees. Does the equal weighted agree? It's down here. And it doesn't want to load. Okay, so if I go in here, back to financials, there's two ways to get the equal weighted. Either here, or if you go into here, it'll tell you if there's an equal weighted. And right now it's not loading, so when it does, great. And if you want to see all the holdings, there's 80 holdings, right? Look at the green. 92% of them are above the 20. Let's go through this real quickly, how strong financials is, okay? 92% are above the 20. Good luck finding a bear in there, right? And here is where the S&P is. 89% are above the 50. And this is where the S&P is. 93% have a bullish MACD weekly. 91% are above the 50. So the internals, that's your equal weighted right here. And what do I see here? Last 14 days, everything green. And the last day we got this. So as earnings comes out, look at this row. It kind of tells you like the internals. Did anything get violated over here? No. Right? And how about this? You want everything in this box over here, right? You want everything in this box. And where is everything? In that box. It's bullish. So, two bullish setups. What do we have? We got ACGL. A little high off the moving average. Go back to XLF. And this is one way to do it. You know, you click this and you can say, okay, WTW. and a little high off the moving average for me. It is a doji. That's all it's telling you. It's a doji above the 20. There it is. MACD's bullish. So those are financial services. That is the sector to be in, even when earnings came out. Looking good. So what are you going to do with this color here? I'm going to make, oh, I don't want that. I want this to be my tags. I want that to be green. So I'll make that green. So when you're doing cheap stocks, so basically stocks under 20, if they're less than 20, at the money covered calls is the only way to get premiums. Now, knowing that the options on the put side are so cheap, you can always buy the stock and buy the puts for protection. Sell at the money. Think about this. Sell at the money because they have more premium. Buy out of the money puts for protection. So basically, you make enough by selling at the money to buy your protection. It's called a collar trade. Collar trade. And you could do that collar trade to get through earnings. I like to go 2 weeks out, 3 weeks out and sell a call to buy a 1 week put. Let me say it again. You go out how far? 2 to 3 weeks. That's a 3 right there. And sell a call. When you do that, you're going to get money against your stock. Use that money to go 1 week out because the options are cheaper. And earnings is this week, right? And you buy a put. Now you limited your downside and you can stay in through earnings. You got room to the upside with very limited risk, and it's a put. You don't need to stop. And that's just one of the rules you always use on stocks under 20. Either a married put or at the money covered call. Any aha moments there? Married put, out of the money put, at the money covered call. And what's nice is you're like, yeah, but if I do an at the money covered call, they're going to take the stock away. So like I'd be selling a 15. And in fact, if they had a 1450 strike, I'd sell a 1450 to get. Well, check it out. Can't you put a trigger right here at 15 to buy more shares? It's cheap. So if they take these away, you buy more here. If you don't know how to do covered calls, guys, we're going to be doing this tomorrow in our wheel strategy class. Bring your candidates. Let me know. Did I tell you guys about Chewy? Chewy popped up on the list. Can I show you that one real quickly? How many animal lovers out there subscribe to Chewy? The Chewy, same thing. See that? Undervalued? Is that pretty close to what it's ever been? And that's going back 5 years. Let's go 20 years. 20 years, same thing. So what this means is this is the lowest the stock price has been to its valuation ever. So when you look for an undervalued company and the sales are going up. Real quickly, does anybody see the value in this tool right here? How awesome this visual is. And the nice thing Aaron and Eddie did down here for us. Does everybody see that? Gap narrowing, deep discount. How would you like to be able to screen for deep discounts, below average, near historical low, with increasing sales? And how would you like to scan for shareholder friendly? Meaning they could afford a dividend and share buybacks. There is plenty of net profit left over. Whether they have a dividend or not, it's shareholder friendly. They have plenty of free cash flow. And you want plenty of free cash flow when you have a good dividend stock. For example, like, I don't know, let's put somebody in here who's a good dividend stock. Is Abbott Laboratories good? Yes, it is. Shareholder friendly, and they raise their dividend, 9-year growth streak. How would you like to search for growth streaks? Meaning they're compounding and raising their dividend every year, and they're shareholder friendly because they still have money left over. Pretty cool, huh? So yeah, you guys, real Real quickly, if you get a chance, any questions you have about using the software, let Leslie and Sylvia know down here under Contact Us. But if you get a free spare moment, throw a thanks into the tech team for doing this. Because, us traders, we ask, can you give us a tool to do this? Can you give us a tool to help us make life easier? That is the best fundamental tool I've ever seen, period. Period. I've seen a lot. Zacks, Reuters. I had subscriptions to Zacks, Reuters. What's the other one? IBD, Wall Street Journal. Nobody has a better visual than this. This is phenomenal.